We are live from Bloomberg's World Headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, a $2 trillion free fall rattles crypto to the core. But Mary Catherine Lader, a former BlackRock rising star, has no regrets about leaving Wall Street for the world of DeFi. She joins us today.
And with leverage and liquidity issues in focus, we'll assess how much of a threat the latest meltdown poses to the market's survival with Troy Gayeski of FS Investments.
Plus, Sam Bankman-Fried to the rescue. We've got details on the billionaire now being called the new John Pierpont Morgan, a potential lender of last resort for the crypto industry.
All of that is ahead, but first let's get a snapshot of the market. And the best way to do that on your Bloomberg terminal is CRYP Go, but I pulled a few of the coins here. We can see that it is lower movement, though not by much for the two biggest ones, Bitcoin and Ether. They're each off a little more than 1%. Bitcoin remains in that $20,000 to $21,000 range, right now trading at $20,680. You're getting a little bit of outperformance today from some altcoins and also Binance Coin, BNB higher by about 0.9%. Where you're getting some underperformance, though, is XRP. Remember, we're still waiting that judgment on the lawsuit between SEC and Ripple. The SEC filing that in 2020, alleging that Ripple issued XRP as an unregistered security. And now Brad Garlinghouse, the CEO of Ripple, says that if the SEC wins, they'll be pulling out of the U.S. So maybe that's weighing on sentiment for XRP today. It's off about 3.5% at this point, Matt.
And that's like the third rail of crypto. If you touch that debate, then the crazies come out on Twitter. Taking a look at really plain vanilla crypto, and that's Bitcoin. It's incredible underperformance. Really, even compared to a lot of other fairly frothy assets. The NASDAQ 100 has outperformed Bitcoin. The IPOX SPAC index has outperformed that. Even the Sol Active Roundhole Meme Stock Index has outperformed Bitcoin in purple here. The concerning thing to me is that the underperformer of the whole group is the NYSE FactSet Global Blockchain Technologies Index. So a real problem in this crypto winter, a real deep freeze. Now, investors, economists, and executives continue to express caution.
The Bitcoin purists, of course, believe in the story of Bitcoin as the currency of the future. Some people believe that it's even going to be the next global reserve currency. But the institutional people don't necessarily believe that.
And through DeFi, the possibility of leveraging exponentially is very, very high. And therefore, the financial risks that are being taken there are huge, and this was meant to happen. These type of currencies have inherent vulnerabilities.
The market is always going to demand more and more transparency.
What is different about this downturn? It's a generalized downturn rather than the last couple of crypto winters, which were sort of specific to crypto.
People are a lot more optimistic than even I expected. You really see sort of a dichotomy between traders of crypto and technology builders in crypto.
I'm highly confident that there's strong appetite from within the crypto space and also in the broader institutional space. We're turning a problem into an opportunity.
So there's still some optimists out there, but crypto may be facing its most important test yet. Our recent Big Take explores how crypto's all-for-one ethos was its biggest draw, and now it's its biggest threat. Lex Suckling of Consensus views crypto's downturn as a traditional financial deleveraging, saying, quote, "What is happening now is about money moving out of deployed functional systems due to over-leverage and poor risk-taking." Joining us now is Troy Gayeski, Chief Market Strategist at FS Investments. Troy, great of you to join us. I was looking through some of your commentary before the show, and you basically said there used to be three reasons to own as much Bitcoin as possible. One being that there was so much money supply, it was young in the halving cycle. There was the opportunity for institutional adoption. Now you say two of those are basically out the window. Where does that leave us?
Yeah, so look, if you go back to the last halving point, you had the natural dynamics of a tremendous bull market. And that's one of the factors that unfortunately a lot of the people that drink the Kool-Aid all day long forgot, is that, Bitcoin has fixed supply, right? So when that supply is cut in half and demand stays constant, just like oil or houses or other assets, you have these meteoric gains. But that also works the downside, and that as prices drop, you don't have less supply like you get with copper or oil or houses or other assets out there. And so naturally, you're in the back half of the halving, so you tend to have bear market periods. So that's one. to your point, Kaylee, look, money supply growth was outrageous levels, 42% in a very short period of time. Was the growth rate. 42% of all dollars ever printed were printed over, an 18 to 21 period. And now money supply is actually contracted in April. We're waiting for the May data now, prior to the Fed actually draining the balance sheet. So those are two very powerful tailwinds that are now headwinds. And institutional—
Troy, the balance sheet is a key issue here. I wonder what you think is going to happen if or when the Fed actually does that. Of course, they didn't reduce it a huge amount after the great financial crisis, and it will be interesting to see how they're able to do that now. But surely that's going to have a very bad effect on cryptocurrencies and a lot of speculative assets.
Well, yeah, so when you think more broadly, any speculative asset, including equities and even more speculative assets like crypto, when the balance sheet's drained, that reduces money supply growth, right? If money supply growth actually goes negative, then you're working in reverse. You're not debasing the currency, you're actually enhancing the currency strength. And so if you think about what can cause the next major leg down for risk assets, equities, or crypto, it's if they actually follow through, and that's still a key if, because they've yet to meaningfully shrink their balance sheet even in June yet. But when they do, it's going to more than likely lead to another leg down. And so that's why you should never own more crypto than you can tolerate losing. You have to be able to stomach these massive downturns. But if you look over the next 2 to 4 years, it's still one of the few asset classes that from this point can double, triple, quadruple, or quintuple. It's just now is going to be a sloppy, choppy mess at best, and more likely losses going forward on a mark-to-market basis.
Troy, what's been the effect of inflation, of energy inflation on Bitcoin, especially on the mining side of things? It's got to be so expensive, especially if you weren't smart enough to put your machines in the Arctic Circle. If you've got them down in Texas, you're going to pay so much to cool them down.
Yeah, that's the new mining hub, huh? The Arctic Circle. No, so yeah. I mean, look, the cost of obviously mining goes up as energy prices go up, and that's one of the key causes of late cycle bear markets is when miners finally have to capitulate and sell some of the crypto that they've accumulated or Bitcoin in order to finance their operations. So far more important has been the trajectory of price and where we are in the cycle than the rising energy costs. But yes, Matt, on the margin, that hasn't been a favorable development, particularly in the new mining hubs like Texas or other places which are experiencing materially higher energy costs.
Okay, Troy, so we've talked a lot about how the broader macroeconomic and environment of risk sentiment has affected crypto. Let's talk about regulation as well, because we heard from Gary Gensler, the chairman of the SEC, yesterday in an interview on CNBC, and this is a quote. He said, "Many of these financial assets, crypto financial assets, have the key attributes of a security. Some, like Bitcoin, and that's the only one I'm going to say, they're a commodity." And I'm wondering, Troy, if you agree with those classifications and how they should be regulated in light of that.
Well, look, I mean, if you think of Bitcoin in particular, it's obviously been around the longest. It has defined code. It has limited supply. It has very good stock to flow. If you think of it as an alternative asset to hedge government profligacy, one could think of that as a commodity. I will leave it to the SEC to interpret others, whether they should be securities or not. Sorry about that dodge, but clearly Bitcoin could be thought of as real assets or real property as it has been taxed at in the past, or as a commodity. We think what's most important is the fixed supply and the fact that new supply is halved every 4 years. And that if you look over a 40-year period or even a 5-year period, the trend is always towards government profligacy, more money supply growth, higher budget deficits. And this is one arrow in your quiver that you can hedge that with, but just understand that in the shorter term, you're going to deal with tremendous mark-to-market volatility, as has always been the case with crypto assets.
Troy, great having you on the program. Thank you so much for joining us. Troy Gayeski there of FS Investments. Coming up, she's the creator of the world's biggest decentralized crypto exchange protocol. We're going to speak with Mary Catherine later, Chief Operating Officer of Uniswap Labs, next.
And Sam Bankman-Fried's shopping spree. Will Robinhood be the next item on his list of acquisitions? We'll dig into that.
And to access all the latest data and news on crypto, check out CRYP Go on the Bloomberg terminal. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lyons with Matt Miller.
And billionaire Sam Bankman-Fried has been making major moves to help the industry survive this crypto winter. Bloomberg has learned now that he may be exploring an opportunity to acquire the struggling app-based brokerage Robinhood. Shonali Bassick joins us with the details. Shonali?
Yeah, of course, Matt. We know that Sam Bankman-Fried had taken that sizable stake in Robinhood already, about 8% of a stake. But now we are learning, Bloomberg is learning, that internally at FTX, they were discussing whether M&A would make sense. Let's take a look at what Sam Bankman-Fried himself has said, that he's excited about Robinhood's prospects and potential ways that they could partner together. But with that said, there are no active M&A conversations going. Of course, we know already that FTX has been going deeper into stocks, buying Embed. So the question then becomes, do they build or buy? Of course, Robinhood stock has risen quite meaningfully on the news that was reported just on Monday, but the shares have come down just a little bit on some doubts about such a combination, guys.
Okay, so this could be a potential way that SBF is playing offense. He's also trying to play defense and also play the hero maybe for some firms in the crypto space.
The White Knight.
Yeah.
It is certainly the White Knight, or as Anthony Scaramucci says and told Bloomberg, Sam Bankman-Fried is now the new John Pierpont Morgan. He is bailing out cryptocurrency markets the way the original JP Morgan did after the crisis of 1907. Remember, Bankman-Fried's Alameda had extended credit to Voyager, and that same crypto broker has issued a notice of default to 3 Arrows Capital, the troubled crypto hedge fund, a loan worth roughly $675 million based on Bitcoin's price on Monday. But let's look around the industry for a second, because not everyone has SBF to the rescue. Take Celsius, because there are reports now, CoinDesk has reported, that Goldman Sachs is looking to raise money, billions of dollars, to buy Celsius assets as the lending company restructures. Then, of course, there's CoinFlex that announced a controversial plan on Monday to issue a new token as one large investor misses a margin call. CoinFlex hopes it restarts withdrawals and resumes operations with the new funds, but there's also a chance they don't raise the nearly $50 million they need, even with a 20% yield promised on those tokens. June 30th, guys, is the deadline to watch.
All right, just a couple days away. Shonali, thanks very much for that. Now joining us is Mary Catherine Lader, Chief Operating Officer of Uniswap Labs, the creator of the world's biggest decentralized exchange protocol and a key player in the world of DeFi. You're not the actual coder yourself, of course, but it's an incredibly interesting move that you've made from TradFi, which is like the cool way to say basically Wall Street now, to DeFi. Is there any regret there? Because we've seen crypto assets just come crashing down in price.
So I had a great career in TradFi, as you put it, but absolutely not. I mean, Uniswap Labs is also very special and different in that it's technology. It's some of the core technology for the promise of decentralized financial services. So what we do is create a protocol and other products on top of the protocol that allow anyone to exchange any crypto asset for another. That's a fundamental revolutionary concept, that anyone can become a market maker, anyone can become a liquidity provider in this two-sided marketplace for assets. So to me, having spent my career in Wall Street and TradFi, this was a fascinating and exciting innovation, and I felt like, and I still feel like it has huge potential in traditional asset classes and for all kinds of new use cases that don't even touch traditional finance today. So it's really quite different from some of what we see of the market dynamics that are happening now. What we do is infrastructure.
What's the biggest headwind that you face or problem? Because we keep hearing, for example, about theft from these bridges. Yeah. Just last week, I think there was another $100 million theft. And it's not the kind of thing that we hear about on Wall Street. When Goldman transfers money to JP Morgan, it doesn't get stolen in the meantime that I know of.
Right. So a lot of that happens at these points of intersection between different chains or between different applications. Uniswap is an application on Ethereum. It is then separately on Polygon or different chains. So we don't actually have any bridges. So we've been very, very careful, very deliberate to not actually build in those points of vulnerability where there still are a lot of open questions about the technology and how to keep it safe. To your point, the biggest challenge we have is how do we make sure that we're building in a way that is safe so that the next tens, hundreds of millions of people feel like they can trust these new systems that do have some core benefits. The benefits of transparency, the benefits of being able to custody your own assets if you choose to, the benefit of being able to realize value that today isn't really recognized in today's markets. And so in order to do that, it has to be safe and trusted. And we're fortunate that so far our conservatism in not doing things like building bridges means that Uniswap has never been hacked, and we are one of the most trusted applications out there.
Okay, so we talked about how you left TradFi to come to DeFi, but how do you bring TradFi into this? How do you attract institutional, traditional, old school players to Uniswap?
I think one of the first things is to explain that this is a totally novel innovation. The notion that you can use smart contracts to allow exchange between assets and anyone to become a liquidity provider and market maker. Automated market making, so to speak, is a novel innovation. And so one is we have to get that message out there and help TradFi understand where is that useful, where does that create a return to profit motive for traditional actors, but also in what asset classes is there a lot of utility in adding more liquidity to the long tail. Environmental commodities might be one example. Less liquid fixed income might be another example. And so I've actually found in the past few weeks, since we've had some of the frenzy around prices and the markets die down, we've had a lot of inbound interest that we didn't even have before from TradFi players saying, well, how can you help us understand what some of the more like high value use cases might be for the technology?
Interesting. And obviously you're growing very quickly at Uniswap. You are in charge of hiring in particular. I know you've added a lot to your headcount. And a lot of those people are women. And I know that diversity in the broader DeFi space, it isn't always its strongest point. So talk to us about how you're thinking about that challenge.
Right. So we are a technology company and in the depths of financial innovation. So neither of those industries are known for having particularly great gender diversity. And it's important to me, it's important to our entire leadership team that if we're building a more inclusive financial system, the company needs to reflect that. There are tons of talented female engineers, but you really have to get it right at the start. And so we're extremely focused on finding incredibly capable female technical talent, and then making sure that we have a 50% gender ratio that we maintain. Our smart contract engineering team, which is one of the most elite and rare skill sets in all of crypto, is majority female, actually. And so it's something that I think if you've been focused on it, it compounds. We're fortunate so many people under the age at our company are under the age of 30, and there are more female engineers who've been beneficiaries of more focus and getting more women into engineering and science and technology. So anyway, it's a priority for our company, and we're going to keep it that way. This week was yet another crypto conference, and I can't tell you how many people came up to me in the industry and just said how much they appreciated and respected our company's commitment to it. So,
and you still see a lot of interest. I mean, especially as asset prices have fallen, and now we've started to see, heads roll at from the Winklevi to BlockFi, right?
Yeah. To Coinbase.
To Coinbase. Yeah. Oh, and that's the worst one, right? Because a lot of people left their jobs on Wall Street and then were denied as they were on the way in the door. Do you still see as much interest as you did before that?
We do. We see tons of interest. I think, look, the key question is, can you trust that the company you're joining is managing their cash effectively? That's true in any industry. And we were very deliberate about how we grew the company, and so we're still hiring. We're hiring thoughtfully, but we are still growing. I think this is a moment where it sort of does separate, why are you interested in getting into this field, right? Are people expecting to just sort of get rich quick and ride a wave? Or are you interested in the fundamental technology that has promise for a much more open, accessible system and for really expanding markets to whole new areas? That's what got me into this space. That's what got most people at Uniswap Labs into this space. And so I think that's resonated. We see tons of interest.
Okay, so we talked about how you're growing your headcount. What's the next growth opportunity for Uniswap? I know you just acquired Genie, which is a play on NFTs, which obviously also is a market that has cooled down a bit. So what's next for you guys?
You're right. We did acquire Genie, which is an NFT aggregator. So they aggregate the different NFT marketplaces like OpenSea. And we did that because we want to be a one-stop shop for digital assets. An NFT is like saying a PDF. It's a file format. And so if you think about building your portfolio of digital assets, you might want to buy different kinds of digital assets at the same place. That's part of the whole benefit of crypto, is you can have the same infrastructure across asset classes. You can use the same Uniswap rails across asset classes. So what we're focused on growing is two things. One is more users. We need to make it way simpler for people to take advantage of the benefits of decentralization, and that means simplifying the user experience and growing into those growth vectors like NFTs. And the second is pools of capital, like the sort of growth of TradFi adoption, pools of capital that will benefit from automated market making.
All right. Great having you in the studio. Thanks so much for coming to visit us. Mary Catherine,
later
there of Uniswap Labs. Be sure to check out our Bloomberg Crypto podcast, which dives deeper into the daily market buzz to explore how this asset class is changing the way we live. We've heard Eric Adams, for example, talk about property deeds and birth certificates, and Mary Catherine is talking about smart contracts. And that, I think, for a lot of people could be the future. You can get that podcast through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lines with Matt Miller. Now to some crypto stories that caught our eye this week, and one of them being Coinbase. Already has fallen very far this year. It's falling even further after Goldman Sachs analysts downgraded the struggling digital currency exchange to a sell rating, citing the continued downdraft in crypto prices and the broader drop in activity levels across the industry. The stock has lost more than 3/4 of its value this year.
Wow. Also, Grayscale is recruiting some heavy hitters to help convert its Bitcoin trust into an ETF. It's brought on Jane Street and Virtu, who would become authorized participants if approved. Remember, SBF came from Jane Street. The SEC has yet, of course, to approve an ETF that holds actual Bitcoin.
And Citadel's global head of business development is leaving to run the firm's new crypto platform. The joint venture is being created with Virtu, Charles Schwab, and Fidelity with the intention of increasing investors' access to cryptocurrency. Jamil Nazarali is hoping to bring his knowledge in the traditional finance space into the crypto space. So once again, Matt, it's about that bridge between TradFi and DeFi. And we talk about Citadel as a market maker, Citadel Securities' role in Robinhood and making those trades free and democratizing finance. It's kind of bringing that same idea from stock trading to crypto, essentially.
Yeah, and it'll be interesting to see if they can attract more talent. You notice where they just moved to, right? They were up in Chicago, and now they're down in Miami, and there's been this battle between cities to see who can be the capital of crypto innovation, and Miami seems to be winning that battle right now.
That's where our Mike McGlone of Bloomberg Intelligence went down to cover this for us. So
taking his talents to South Beach.
If we all could do that, that would be wonderful. All right, that's going to wrap it up for us here on Bloomberg Crypto this week. But coming up next week, we're going to be speaking with Noelle Atchison, head of market research at Genesis Trading. What is her view on the trajectory of prices from here now that we're stuck around this 20,000 level or so for Bitcoin? So don't miss that conversation next Tuesday at 1 p.m. right here on Bloomberg.